Good afternoon, dude traders. Here I want to talk to you about VXX. If your VXX is not it is a stock, but it is not a stock like a stock in a company. It's a stock in the volatility index. And as you can see, what the price of VXX is determined by every day they sell short-term futures, the futures that are going to expire in this cycle, and they buy futures to expire in the next cycle, which are typically priced higher. So it has what's called a negative roll. And as you can see, this is a 1-year chart of the price of VXX. So a year ago, VXX was right up there about $86 a share, and today, this past Friday, it closed at $26. And you said, well, wow, if I'd have shorted 100 shares a year ago at 86 and now it's 26, I'd make $60 a share. And that is a true statement, because it tends to, over a period of time, decay in price. Now, beware, if you short shares and you get a volatility spike, like right here one day you see it went from 43 to about 57, about $13 a share spike in one day. So if you were short 100 shares from right here, you'd have been down $1,300 in one day. But as you can see, over the period of time, say a couple of weeks, you'd have come back and got your money back. But there is no limit to how high this can go. You can short at $28 and it could go to $56. It could double overnight. So there's some risk in shorting it. So there's a couple of trade ideas I got here. One is if you want to play options on VXX, which is very liquid. As you can see, Friday it traded 13.8 million shares, a lot of shares. And remember the chart we just looked at, over the year it typically goes down. So the closing price of right around 25.71, I'm looking to sell the 27 call and buy the long 29 call with 27 days to go. This gives you a 48-cent or $48 credit. And if the price continues to decline like we have seen in the chart, 27 days from now you should be able to make a $48 profit. Now, having said all of that, there is another way to basically short the VXX, and that is by buying shares in SVIX, which is inversed. As you can see, this is the same chart over a year. A year ago, this was at $12.97, we'll just say $13, and Friday it closed at $26. So basically, it would have doubled your money if you would have been long shares. Now, as you can see, the last few days this past week, it did go down in price. It was as high as round numbers of 28.17. It's down to 25.5 because volatility. It went up a little bit last week, and it's moving. As you can see here, we'll go down to a 1-minute chart. This was Friday's 1-minute chart. So it had about a low of 25.63 and a high of 26. So there, right there, it was an opportunity to scalp. There was a dollar movement. The thing about going long shares, basically you can buy and hold forever, but you could also trade cover calls. Now, they doesn't have as many options available. As you can see here, they're about one series every month. So I would advise looking, if you wanted to trade the SVIX, would be to buy it, let it go up and sell it short, that way scalp it. I would leave the options alone, really. The options in here, the bid ask spread is really wide, 60 cents right here. It's 50 cents at the money. It's too wide for me to play. So if you're going to trade that, I would trade the shares only. So there's a opportunity here to play volatility, but define your risk, because this thing can get away. Good luck to you.